All right, and welcome to iView Markets. And today we're going to be talking about ETFs and how to use the site regarding ETFs. If a lot of you don't have experience with ETFs or really understand the benefits, essentially an ETF is a composite where you will have diversification to the underlying market. And essentially, ETFs more or less are really good ways to diversify your portfolio to have breakdown of correlations, meaning that you will be able to have better asset allocation in your portfolio than just go ahead and investing in 100% of US equities. So, if you're invested in fixed income, international markets, emerging markets, commodities, metals, the correlation breakdown is obviously far better than if you're 100% long equities. Now, if you're not familiar with modern portfolio theory, and we're not going to go into how you should weight your portfolio based on asset class levels, but essentially, modern portfolio theory says that about not close to 90% of your portfolio returns are going to come from the asset class level. It does not come from the stock selection. And so if the S&P is up 30% that year, most likely the bulk of your returns are going to come from, let's say, the S&P versus if it's outperforming broad markets. Vice versa, if fixed income significantly outperforms and U.S. and international equities are flat to down, the majority of your returns are going to come from fixed income. So on a very high level, ETFs are very good, so you can have the proper asset allocation, have less correlated portfolios than to any one specific asset class. Now, how do you go ahead and find different asset classes to invest in based on iView Markets? Well, up on the top left, you'll see here the major asset classes and world markets. So let me just maximize that. And essentially, you don't need anything more than what we are providing here, the major food groups, if you will. You don't need any esoteric ETFs to really get exposure. So what we have here is international markets, Europe, Asia, emerging markets, small caps, mid caps, commodities, gold, high yield, emerging market bond yields, U.S. bond yields, and international bonds as well. Quite frankly, historically going back just on a risk to reward basis, I prefer the S&P 500 on a risk return basis versus US domestic small caps and mid caps, and it just keeps it easier to keep track of one ETF anyway. But that's not to say in certain periods of time, small caps and mid caps won't outperform large caps. I'm just talking on a risk adjusted basis. All right, so I would say almost every major asset class right now, except emerging market bonds, high yield international bonds and REITs, are pretty strong. It's a 10 out of 10. And what is the 10 out of 10 score? Well, we talked about it before. That is grading the momentum, the relative strength of that market. And essentially, the relative strength is comparing that particular ETF to its own strength itself. It's not comparing it to a specific benchmark. And we have a video on how we grade the relative strength. All right, so before we even really get into any more talking about the specific momentum, you can click, and if you do see a specific asset class that's increasing, let's just say gold has moved up from a 2 up to a 6. Now we want to take a look at what is happening. You can click on the colored bar, and that will bring up the Renko chart that we've discussed numerous times. Now, if you're not familiar with the Renko, again, you want to check that video out, but you want to click on the middle format button under the volatility stop. The ATR stop and the volatility stop are the same thing. So you want to click on the middle button. You want to do the length 20 days, the multiplier of 3, the style. You want to move over to the middle more. You want to have a line and make sure everything you do you save as a default. All right, so let's just briefly touch upon what we're doing here with the Renko. The Renko is essentially a price only chart. It's not looking at time, it's not looking at volume, and these are called blocks. Every time a new block develops based on the average true range of 14 days, it will develop either a positive higher block, green, or a lower negative block, that's red. Now, what I do for this basic concept, I use an additional qualifier on top of the Renko, which is the volatility stop or the average true range stop, which is the green line and the red line. Once the Renko breaks above the average true range stop, that is to be perceived as a buy signal. So you would have bought emerging markets at 36 and you would have not been stopped out. Most people that are using Renko will say 2 to 3 bars down starts to form a new negative trend. But again, I don't use that in isolation by itself. We use the additional qualifier of the average true range. And it didn't even bounce off of that level. Now, you could use sometimes the average true range if it bounces off there as another buy signal, but that's for another point in time. Now, what you could also do is to get a better glimpse of how strong, like any other type of technicals, how strong the signal is. We could see back in 2014, the emerging markets broke that level, so that could be considered a pretty strong signal as well back in November. And we're looking at a nice price advancement there as well, from 46 to almost $50. And now we just broke out of that 2011 high, and we're now looking at 2008 levels. So the Renko makes it very clean. You don't have to be extremely sophisticated to use it. Obviously, you would have done very well back in early 2016 when you first had that breakout with the Renko, even looking at that weekly. So now, those are the major asset classes that we look at. And what I would suggest is going to your portfolio page, having one section of ETFs. So you want to create the portfolio, click on ETFs, and then you have all your ETFs here. Now, if you're watching these, you'll see them on the home page. You'll get a general sense anyway if they're increasing in the short term momentum with the MACD. MACD is not a good indicator for long-term trend following. It's noisy and the momentum often fails rather quickly. But it is good to look at if the short-term momentum is lining up with the longer-term relative strength that we have, and also lining up with the ATR. So for example, let's just look at XLF or XLV here. And the momentum again is turning quite positive, but this broke out a while ago. So the one issue is with the Renko, where do you possibly get back into the trade if it's been running for a while? So what I would do is I would defer to different levels looking back on a weekly chart. And quite frankly, we're sitting at all-time highs for XLV here. All right, so again, you could keep track of all of your ETFs. Now, finding some additional ideas, we can go to the ETF page. And what I will do is under ETF momentum, I just like to look at what's increasing the most in the ETF momentum the most in the last 5 days, and then I could also click here what are increasing the most in the last 30 days. So that could give you kind of a quick glimpse of what's happening with some ETFs. Additionally, relative strength for some additional ideas. What you could do is you could look at the strongest ETFs globally. You could put that in your watch list, get a general sense what's happening. You can also look at the shorter term momentum, what's happening. Just because that these are the strongest ETFs on a relative strength basis doesn't mean that the short term momentum is going to be strong. You could also look at domestic markets as well and get a general sense of what's working here. Okay, so that's one thing. Now, the next thing you could do is, well, you could defer to the broad markets page. These are all ETFs except the upper right region. Those are stocks. And if you want, you could come in here and just glimpse and say, okay, what had possibly a negative or a positive catalyst in terms of technicals? Well, okay, EEM right here, new all-time high, approaching overbought. Um, U.S. stocks, that's pretty. Convertible bonds, new high. So you could get a couple different little basic technicals that you could click on and look at some of these different ETFs, and you could put those in your watch list as well. And then lastly, for the asset classes, you could look at, okay, what's working today, what's working on a 1 week basis. That 1 day, 1 week, 1 month really is not going to show you momentum. 6 months, I don't know what chart that is. Let me just remove that. 6 months and 12 months are really the momentum areas that you want to be watching for. And these could potentially give you some ideas of what is working as well. Okay, so, but if you want to kind of get a little bit of a glimpse at potentially what's starting to work, we could look at a 1 month as well. And again, you could just put these into your watch list. Let's just take a look at Italy as well. We can go to the chart page. And obviously, almost every single global market at this point is a 10 out of 10. Italy broke out um, almost a year ago at $22. And again, you could also come down here. Once you put all your names in, anything that highlights on any of those ETFs, you could have some high level signals, negative or positive catalysts, and it will highlight as well right here. All right, so if you have any questions, please feel free to contact us. Thank you.